What's up everybody? Nate here. The housing market in the United States is in another crazy spot. We are seeing homes sell faster than they ever have in American history. But not only that, but housing and shelter costs are rising at their fastest rate in nearly 40 years. And this comes at a time when we have super high demand for homes and an incredibly low inventory, which has led a lot of investors and experts to ask, is the housing market in a bubble? Is that bubble about to burst? So today we're going to look at what is going on with the housing market right now. And we're going to discuss if the housing market is in a bubble like we saw during the 2008 housing market crash, or if what is going on right now is completely natural and is actually here to stay. But before I break all of this down, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now let's talk about what is going on in the housing market right now. So according to realtor.com, a house is selling in 61 days. So from the time that it is initially put on the market to when it finally goes through closing is only around 61 days. That is the fastest we've seen in pretty much the history of our country. Since the pandemic started in March of 2020, home prices are up between 20 and 30% in the United States. And right now, there is no sign of stopping in the housing market. You have a super low inventory of homes right now. In fact, new listings for homes actually decreased by around 9% in January. And total inventory year over year is down by 28%. Now, there's a few different reasons for this. For one, home buyer sentiment is down and at its lowest point in a very long time. It's really hard for builders to start building brand new homes because the price of materials is going up again. Not only that, but it's hard to find employees and workers for a lot of construction companies. Our labor shortage and great resignation has hit pretty much every industry, and home builders are no different. But even if builders are able to find workers and then pay for all of the supplies on a home, well, then they have to wait for those supplies to be delivered. Not everything is going to be in your backyard, and not everything is sitting in a warehouse. Some things need to be built from scratch and are not built or created until they're ordered. So builders are having to wait because of the massive demand for new homes right now. So many people thought they could cheat the system in 2020 and in 2021 by just buying a new home. It was pretty much assumed that because there was only so much space and only so many houses on the market, that the solution would be to just build a new home. However, that led to lumber costs hitting a record high. The supply and demand got way thrown off, so it ended up being way more costly to just build a new home. In fact, it was sometimes costing homeowners $25,000 to $50,000 on average just to build the same home. Versus in 2019, that same exact home would cost you almost $50K less. But right now, residential construction costs are up by 21%. So that's pushing a lot of people out of the home building game because they just can't afford to pay those prices. So that's one reason. Houses aren't getting built, so they're not getting listed in our communities all throughout the country. The second reason, though, is because Americans right now who are not selling their homes are making a killing. In 2021 alone, homeowner equity actually went up by around 42%, which is up from the 30% we saw in 2020. Equity in a home is basically the difference between what you owe on your mortgage and what you've paid off. So if you have 100% equity in your home, then you have no more housing payment. The only thing you're paying is your yearly taxes. With homeowner equity going up so much, that means that people have way more ownership in their house than what the bank owns on their home. And the reason being is because home values have gone up like crazy over the last 2 years. So if people were to sell their house at that particular moment, then they would basically be able to sell it in full and not owe anything on their mortgage. In fact, they would have extra money to go out and buy a new home. That has given sellers a lot of confidence, and it's given them a lot of confidence to not sell their their home because they're continuing to build that equity. And for probably the first time in American history, Americans actually owe less on their homes. So Americans don't want to sell and lose a lot of that equity. They'd rather hold onto it and then sell when it makes the most sense to do so. However, that hasn't been the case for everybody, as we're still seeing some homes being put on the market, but the inventory, like I said, is going way down, which is making the price of homes go even further up because we have a supply and demand problem. New homes aren't being built and less homes are being put on the market, meaning that if you want to buy a home, it's between you and probably 100 other potential buyers. What that's doing is causing a lot of bidding wars in the housing market, pushing up the price of new homes even more, because if somebody puts their house on the market for $100,000 right now, well, that is basically the minimum because people are so willing to pay whatever it takes to get a house and there's only a few on the market. Well, for most homes, they're going well above the asking price. That 100K home may end up going for $120,000 or $150,000, which is what is leading a lot of investors and buyers right now to consider that our housing market may be in a massive bubble, similar to what we saw in 2006 and 2007, right before the housing market collapse. During that time, housing values went down by 90 to 100%. So in 2005, if a house was put on the market for, say, $100,000, in 2006 and in 2007, it might only sell for $10,000. Now, back then, there was kind of this housing market bubble that was getting set to explode because banks and financial institutions were basically just handing out mortgages to anybody that walked through their doors. They weren't checking for income or credit. They were basically just giving someone a loan and then figuring out the rest later. The reason that kind of created a bubble is because these banks and financial institutions were getting billions of dollars every single month from a lot of these home mortgages. And then mortgage-backed securities were getting pulled together for investors on Wall Street, and the value was going way up, and it seemed like a pretty safe investment because people were always going to pay their mortgage every single month. And that was fine if people were able to make their payments, but the second that the majority of Americans can't make their payments, well, now you have a housing market collapse. A lot of those loans were adjustable in 2006 and 2007, so it looked like people were going to be able to get in on a home and pay way less than they normally would because it's an adjustable rate mortgage. The interest rate is going to fluctuate depending on what our economy does. However, with demand going way up for homes, those adjustable rate mortgages eventually started to spike and skyrocket. Now, those millions of Americans that just bought a home, well, they can't afford their mortgage anymore. So the housing market essentially collapsed, and then the stock market followed suit because those mortgage-backed security markets, well, they're tanking as well. That created a lot of problems, but what are things like today? Are we facing a similar bubble? Well, things are a little bit different in 2022. It is really difficult to get a mortgage. You have to show proof of income. You have to have a really good credit score, and you have to have a sizable down payment. If you don't have those things, a mortgage company and a financial institution is not going to give you a loan. That's because of what happened in 2006 and 2007. There is a lot more safeguards in place right now. However, with that being said, there are two assumptions that we can make, and they are completely different. For one, you can say that the housing market is in a bubble. And by that terminology, a bubble is eventually going to burst because of market conditions. They just can't be sustainable forever. On the flip side, though, you can say the housing market is not in a bubble. What that would assume, though, is that these housing prices and conditions are basically going to continue forever. Housing prices are not going to go down, and this low inventory isn't going to change either. Meaning, in that scenario, we are not going to see a flip in the housing market. However, the opposite can also be true. These prices and this inventory cannot continue at this pace forever. And I think that is the more likely scenario in 2022. And let me explain. Housing prices and demand for houses is one thing, but then we have a group of Americans who have already purchased a home. Now that you've bought a home, you have to make payments on that home. And in 2022, it is getting increasingly more difficult to do so. Because home values in pretty much every neighborhood across the country are going up, that affects the amount of taxes you're going to have to pay. If property values in your neighborhood continue to go up, chances are your property taxes are going to go up too, which means the overall price you pay on a mortgage is going to start rising. In addition, we have raging inflation in the United States. In January 2022, inflation hit a new over 40-year high of around 7.5%. What that means is that the prices for goods and services in our economy are going to go up. So if something costs $1 today, a year from now, it might cost $1.07 or $1.08. Everything is going up, which is eating into Americans' budget even more. And then you have sort of the outlier, with some Americans still choosing to pick those adjustable rate mortgages because for the past 2 years, interest rates have been bottom of the barrel low. In 2020, the Federal Reserve decided to set its benchmark interest rates at 0% to incentivize Americans to go out and spend money. Because of that, that basically started a roller coaster in the housing market, with people now going out and buying homes at record rates. Well, that is slated to pretty much end in 2022 because the Federal Reserve has vowed to use all of its tools necessary in order to bring down inflation. One of the ways they've planned on doing that is by raising their benchmark interest rates up from 0%. Now, as of recording this video, they haven't said exactly how much they're going to raise their rates or how many times in 2022, but the general consensus is that their benchmark interest rates are going to be around 1% to 2% in 2022. If that were to happen, that would be a massive increase, and the most aggressive the Federal Reserve has gotten with inflation in about 40 years. But it would also mean a similar situation to what we saw in 2006 and 2007. All of those Americans that got adjustable rate mortgages because their payments were going to be super low month by month are now going to be paying a lot more because interest rates are slated to go up. The fact is, Americans just can't pay all that much. And with inflation going up and taxes going up, it's going to be impossible for Americans to have a home. That could lead to millions of foreclosures all throughout the country. And with the mortgage moratorium ending in the United States and stimulus also going away, well, Americans have less money overall. But they still have to make their housing payments. So like I said, foreclosures could increase, and that means millions of homes are about to come on the market. But when a home goes through the foreclosure process, it doesn't just get listed for whatever the market value is. Banks and financial institutions essentially repossess this home because that is collateral in a mortgage agreement. They want to basically get rid of this home as fast as possible, so they're going to undercut the value of that home. If we have millions of homes put on the market that are undervalued and easy for people to buy, well, now you're going to see inventory go up and you're going to see housing prices in general start to go down. Because these aren't typical foreclosures. These are foreclosures from regular everyday Americans who are just in over their head and didn't see this problem happening in 2022. So they're gonna be pretty decent homes here. Like I said, not your typical foreclosure. If somebody can buy a house for $100,000 less for basically the same home that's overpriced at $100K, well, that means the value of that overpriced home is going to decrease. So now you see how the housing bubble can actually burst in 2022. But that's not all. Many homebuyers believe this is a terrible time to get a home right now, which means they are purposely exiting the market and waiting to get a house, which means they're either staying where they are right now, which could be a house, or they're choosing to rent either a home or an apartment. With that being said, if pretty much all buyers disappear from the market, well then nobody that's putting their house on the market is going to be able to sell it until they start dropping their prices down. And if they drop their prices, then people might start to continue, but that means home values may decrease in 2022. It really just depends on how high the Federal Reserve and how aggressive they get with inflation this year. Not only that, but mortgage rates are rising too because banks and financial institutions know that the Fed is going to raise their rates, which means it's going to be harder for people to borrow money, making it once again difficult to get a mortgage. So buyers are basically drying up, leaving sellers with no one to buy their home. That means there's less of an incentive for sellers to put their homes on the market, which means even lower inventory, which means with no one to buy your home, values are going to go down and the housing market is set to burst. But it'll be different than what we saw in 2007 and 2008. Back then, it was a complete collapse. Nobody nobody was able to pay their mortgages anymore, and that led to millions of Americans not being able to have pretty much anything. It led us into a recession because now people weren't able to pay their bills, and it was hard for people in general to buy a home. I don't think you'll see a situation like that because there's no reason why incomes in the United States are going to decrease. If anything, they're actually going to continue to go up because of inflation. However, the buying power of those dollars is going to go down because Americans are going to have to spend so much more money on all their basic goods and services in 2022. But in my personal opinion, there is no way we don't start to see home values decrease over the next year or so. The Federal Reserve is going to raise its interest rates, and when it does that, buyers are naturally going to get pushed out of the market if they haven't been pushed out already. I don't think you'll see a complete housing market collapse because Americans are still making money, and they're going to be able to swoop in and buy those foreclosures. Housing values, though, are going to have to come back down, or at least level out. Prices just can't continue to go up forever because the market is set to change. The Fed is raising its interest rates, buyers are exiting the market, sellers are putting fewer homes on the market. We're probably not going to see more homes get put on the market. That's either going to level out or continue to drop in the United States. If you start to see home values come down, well, you're not really going to see a lot more buyers enter the market because that house is probably overinflated in its price anyway. It's really just dropping down to a level that it actually should be at. And because the Federal Reserve is raising its interest rates, well then it's not going to be so easy for somebody to jump in and buy that house. That could mean the housing market completely cools off and this bubble of home values eventually bursts and prices start to decrease. I mean, there is a situation where it could continue to go up if the Federal Reserve is super slow on raising its interest rates and the inventory of homes continues to get less and less, but demand suddenly spikes because wages and salaries increase in the US, then the housing market could again explode. So far in February 2022, that is not set to happen. But overall, I think we all need to keep our eye on the housing market because nothing goes up forever. The stock market doesn't go up in value forever. The housing market will not go up in price forever. Eventually, something is going to happen that brings it down. And right now, I think we're starting to see a situation where prices and value in the housing market could start to rapidly decrease. But absolutely nothing is set in stone yet. What I'm basically saying is there's kind of perfect conditions for both scenarios right now. And we'll have to just keep our eye on what happens next. But now I want to hear from you on this issue. What do you think is going to happen with the housing market in 2022? Do you think that housing prices and value will continue to just go up for the rest of this year? Or do you think that we're starting to see a situation where values and prices are going to start decreasing? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from all throughout the country, our team puts together a free daily newsletter and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with everything going on in the business and financial world through video breakdowns, I'm putting out videos every single day on this channel, and I've got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.